So if you guys are just coming in, we're going to be going over my Doji system. My Doji system is used to find support and resistance levels. It can be used on stocks, crypto, Forex, whatever. It can be used on many different markets. I've already done a video on this topic on my channel. If you go to my How to Trade highlights, it's the first video in that playlist. I think it's called How to Find and Trade Key Support and Resistance Levels. So this is going to be basically a part 2 of that video. I'm going to use this time to answer questions that people have about my Doji system, or just kind of reiterate what I went over in the first video. If you guys have any questions, like I said before, please put them in chat and I'll answer them immediately. And if you guys are watching the video on YouTube, feel free to put any questions in the comments and I'll get to them as soon as possible as well. But alright guys, let's get started. So, the basics of my Doji system are very simple. What I look for is an impulse move down or up, and I want to know where is that point of origin of that impulse move. So this would be considered the point of origin if we had some kind of support here that failed, or if we had some kind of resistance here that failed. These would become your point of origins. Okay? That is the basics of this system. That is what you need to find these dojis. Okay? So, let's just go back to... I'm going to start from like here, because we can see how the levels play out to the upside and downside. You can use this on any time frame. I recommend using it on higher time frames, like the 1 hour, 4 hour, daily. But it can be used for scalping as well. I have demonstrated that on stream multiple times. But yeah, let's get started here. You have this point of origin right here, right? So you have an impulse move up. You have this little cluster of support that created this impulse move up. So this impulse move up created a new high. So you had a really strong breakout. So we want to see, where did that impulse move originate from? And why did it break out so heavily? So if we look back, we can see that it was really struggling to break above this level here. Let me zoom in a little bit more here. So we can see that it was really struggling to break above this level, right? So you can see that all of these candles here during this kind of accumulation are nothing but a bunch of dojis. And a doji, if you guys don't know, is just a candle that has a small body and small wicks on both sides. It's an indecision candle. It's kind of a battle candle where the bulls and the bears are battling. Now, a lot of people ignore dojis, but I think dojis are the most important candles on the chart, because that really shows you where the bulls and the bears are battling for price. So, okay, we have this cluster of dojis that acts as your point of origin for your breakout. So that's the first thing we need. Now let's see, where was that breakout? Where did that breakout really start to gain momentum? So you can grab the dojis right where that breakout finally happened, or you could go even lower and find like that bottom doji that was kind of the bottom of that support. Hopefully that makes sense. So if we have an accumulation here, if we have a support, let's say you have a doji here at the top and you have a doji here at the bottom. You can take the level from the doji at the bottom that was not broken, or you can take the level from the doji at the high when the price really started to break out. Okay, so let's look at both of these levels here and look at how price reacted to these levels when it got to this point of origin. So you can see that, yes, this is hindsight once you see the high here, So once you have that breakout, this becomes hindsight. But you could have waited for these levels throughout all of this price action. So it's not complete hindsight trading. You can see price found a beautiful support here, began to bounce, but then failed downward. Now let's see where it bounced. Let's see if we can find another level. So same thing here. Look at this. These are my favorite dojis to use, are the evening star and morning star dojis. So when you have like an impulse move down or an engulfing candle, you have a small doji and then you have an impulse move up. This becomes a beautiful level for if we start to fall back down, this becomes a beautiful support. Okay, so look at this doji here. You have that impulse down, you have that support, and then breakout. And then look at what we see. We do not see any break below that support once that doji was created. This is why I say that dojis are the most important candles on the chart. Because what happened during this doji? You had a massive sell-off, you had the buyers retrace, and then you had a massive battle between buyers and sellers. And then what happened after that battle? The buyers completely broke out. So the sellers were defeated. So when the buyers start to fail and start to pull back, they have a lot of support during that doji. Okay? Let's look at where price bounced recently. Talk about hindsight, right? So if you used my Doji system, I've been talking about this for about 2 years now, almost on stream. You could have seen that this is a very strong support. But if we were to break this support and we look back, we don't really have that strong of a support below us for quite some time. You could grab this doji here. I don't typically like these dojis, but you could grab that doji. But the dojis that I would really take for a lower support is this last little move right here, where you have this slight doji pullback and then you break to the upside. So if we were to break this cluster of support here, you don't have a major support until like 5,800. Let me rephrase that. You don't have a major untested support. You do have major supports if you go back to like 2018, but all of these levels have already been tested. These levels have not been tested. They are clean levels. Clean levels will have a stronger reaction than levels that have already been tested. Now let me make sure I'm not missing any questions. Will our next breakout just come back to the 8K level point of origin since we are making new support here? So let's see. So we just made a new point of origin doji. Our new doji is 7,500. We also just tested another doji right here. And we broke this point of origin doji. We also just broke this point of origin doji. So these dojis did not act as a strong enough resistance to hold price down. Because this breakout was so strong, these dojis were not strong enough to hold price down. And if you look at this on a lower time frame, you can really see what happened. You had no resistance here, you broke through it, but look at where we failed. Look at where we failed on this first wick. So let's delete these other levels. Look at this first level here. What's the high of that candle? 85.85. What is our doji? 86.5. So you missed that level by $1. This was a 16% candle, and you missed that level, or you hit it by $1. So these dojis can be very exact, even during massive breakouts or massive breakdowns. And you can see you had a pretty strong scalp off of that level. You went from almost 8,600 back down to 8,300. You had a $300 failure to the dollar on that doji level. Okay. So you still have this level kind of acting as a support and resistance zone. Now let's see if we break out of this accumulation, where are our next levels going to be? So one thing that I do with my doji system, so you have a doji here, right? And you have that breakout to the upside. So if you have a breakout to the upside, you can grab the top of that doji, the whatever is higher from the open or close. So this is a green candle, or it's a white candle on my chart. So the highest price from the open and close is the close. If it were a red candle, the higher price would be the open. So if it breaks out to the upside, you want to grab the high of that candle, the high of the open and close. If it does what we see here and breaks to the downside, you want to grab the low of that candle. It pretty much is almost the same level most of the time, but sometimes these dojis can be a little wide. So just know that there is a resistance there. And what a lot of people like to do with my doji system is, instead of drawing these exact levels, they'll just take the entire doji. So if you're not like an exact trader, if you don't really care about exact levels, people have showed me that they'll do this. They'll grab the entire doji. Now I do this sometimes, but not all the time. So you can do that if you wish. But just know that if we move forward, if we move upward, we have a resistance right here. And if you look at, before we broke to the downside, where did this candle find support? Now look at this level here. Let's go down to a shorter time frame. Oh, it's gonna take me a long time. Let's go to an hourly. Here we go. So look at where that candle, this failure downward, look at where that found support. We can go all the way back and use this daily doji right here, to look at a lower time frame and find where that support was found, and it was found almost exactly on that doji. Does that make sense to you guys? Does everything make sense so far? How to find the dojis, when to take the high, when to take the low, when are they support, when are they resistance? So here's another perfect example. You have a red candle, or black on my screen. So you take the low of the candle, and you have resistance, resistance, resistance. These also are swing failure patterns. So if you guys watched my video from yesterday, we talked about swing failure patterns. These also become swing failure patterns because they break the level and they retrace back down. Now, another thing that I recommend doing is what I just showed you earlier, is if you take the daily levels, you can go down to a lower time frame and trade the daily levels. I don't recommend taking like a 15-minute level and then trading it on a 1 hour. Always go down. So if you take a 1 hour doji, like we're currently forming here, you don't want to trade this on like a 4 hour. You want to trade it on like a 15 or a 5. You want to trade down. So if you make higher time frame levels, you want to trade down. You don't want to trade up. Trying to think of anything else I can add that wasn't in the first video. Do you guys have any questions? So same thing here. Check this out. You have a doji. You have an impulse move down. That's the two things that we look for. You would look for the impulse move and the point of origin of that impulse move. You have a doji here, and look at where we topped out in 2019. This also became a swing failure pattern. But look at where the candles are closing. The candles closed all resisting that doji. And also, look at where you found resistance right here. So you have that doji, impulse, pullback, first test, failure. And then look at what we're seeing here. Continuation of that resistance. So until that level, 11,560 is broken, you're going to have resistance on that level. But now look at what we're doing. Weekly, you have a doji. You have a swing failure pattern of that doji. Okay. Let's look at some other examples. Here's another doji. So this one was broken to the upside. So you would grab the high of that doji. Look at this. You're not tested, right? So you're not tested on this little distribution. But if you took the high of the doji, you are tested. So here's another example of what people used to show me. They used to show how they do the entire doji instead of just one of the levels. So they would grab like this whole doji here. I don't like it because sometimes the dojis like this get really big. So I don't typically do that. But you can see here, if they took this entire doji, you have that clean bounce of that high there, and you're kind of finding support during that doji. But yeah, here's a good example of if you take the wicks, they're still good. So not only the bodies are strong, the wicks are strong as well. And then look at the body here. So if you take the body, look at where we're failing. We have a resistance being put in on both of these highs. How much do you take into account the different style of dojis? For example, falling stars, hanging men, and hammers. So I don't care too much what kind of doji it is, but my favorite dojis are like morning stars and evening stars. So like these dojis. I put more emphasis on these dojis than I do all the other ones. All the other ones are kind of just the same. You can always do the whole doji horizontal ray, and yeah. So I've actually done that before on stream. That's a good point. So you could do a line there on the high, a line there on the low, and then you could do like a rectangle for like the body. Now, you are looking at a weekly doji. Do you suggest always looking for higher time frame dojis first? It depends on what you're trying to trade. So if you're trying to trade short term, like not scalping, but just like short term trading, kind of like intraday trading or maybe slightly swing trading, I recommend doing the 1 through 4 hour. I call these the mid macros. So 1 hour, 2 hour, 3 hour, 4 hour. I recommend doing those dojis. If you're doing like short term to kind of slightly swing trading. If you're doing longer term swing trading, I recommend doing the 4 hour or the daily or the weekly. And then, like I said, you can take the weekly or daily levels and then trade them on like a 4 hour. You don't have to trade them on the time frame that you made them on. But know that for like swing failure patterns or considering if something closed above or below the level, you should use whatever time frame you made the level on. So if we took the doji here, so we took the doji here, right? This is a 4 hour doji. These candles did not close below that level. But if I were to look at a lower time frame, these candles closed below that level. So if you're using a different time frame, you want to make sure you're basing your analysis off of that time frame. You can trade it on a lower time frame, but if you're like, okay, is this a swing failure pattern? Is this breaking the level? You want to determine that based on the time frame that you made the level. Does that make sense? But yeah, you can see how the support holds pretty strongly here. Now, one thing to keep an eye on for Bitcoin right now is look at this Doji here. So you have a Doji here. You are breaking the Doji. You've acted as resistance. You broke it, and now you're failing. If this gets back below this Doji and starts to act as resistance, you're not looking very good, and you probably will retest kind of this system or this system here. But if we do hold this support, then that's a support. So longs would be very good above that level. Four hour, and daily. 1 hour, 4 hour, and daily are my 3 favorite time frames for the dojis. 1 hour, 4 hour, and daily. The 1 hour dojis are very clean. 4 hour are very clean as well. Daily are really good for long-term trading. You can see here on the 1 hour, you could take... So it doesn't have to be a doji every single time. So I would consider this still a doji. And you guys have probably heard me say this on stream many times. I'll call something like this a doji, even though it's really not a doji. When I say stuff like that, I'm just referring to like my doji system. So I would take this candle because it matches my criteria. It's kind of a small resistance that pops into a massive impulse. So that is your point of origin. So when I call something a point of origin, I'm referring to this. So you have a point of origin here. And you can see how we acted as support. And then once we were broken, we acted as resistance, and it pushed price down. So it doesn't always have to be a beautiful doji. So another example is here. Look at this one. This is not a beautiful doji. You could take the low there, and that would act as resistance, or you could go back and take the doji here. So you see this doji right here? You could take that doji, and that acts as your level as well. But if you're taking the last candle before that major breakdown, you would take this candle here. So this system has a lot of leeway. You don't have to be exact. And that's why, like I said, a lot of people will just take zones because they don't really care to be exact. Now you can see how this little point of origin system acted as a kind of SR flip here. So if we were to pull back, you could look for a support around that 8250 to 8300. But alright guys, I gotta wrap this video up. If you guys like this video, make sure to hit that subscribe button. Make sure to leave a like on the video. If you guys didn't already, go back and watch the first video I did on this system. It's in my How to Trade highlights. It's the first video. It's called How to Find and Trade Key Support and Resistance Levels. So make sure you check that out if you haven't already. It's going over the same exact system. It's a little bit longer a video. It's about an hour long. So you guys can learn a lot from that as well. But alright guys, I appreciate you guys being here. If you guys have any further questions, feel free to put them in the comments. And as always, I'll get to them as soon as possible. And I will see you guys next Monday. I don't stream on the weekend, so we'll be back Monday for another stream. Alright guys, appreciate you guys being here. You guys have a good weekend. See you later.